The current live price for Nuburu Inc., trading under the ticker BURU on the NYSE American, is $0.499, reflecting an intraday gain of approximately 5.01% as of 1:22 p.m. Eastern Time. Now, a typical observer might look at that 5% jump, especially in a stock that trades below $1, and simply dismiss it as noise, another pump and dump in a volatile microcap. But here's the unexpected angle. This recent volatility is not random. It's a direct function of a complete, rapid, and aggressive corporate pivot away from the company's original core business, blue lasers for industrial manufacturing, and straight into the high-stakes, high-multiple world of defense and security technology. The real story here is less about industrial welding lasers and far more about their recent acquisition spree and strategic capital raises, positioning them as an entirely different entity than the one retail investors thought they were buying even 6 months ago. This transformation is the engine for the extreme short-term stock movement. The common market expectation around BURU is that it is a struggling industrial technology company constantly battling with liquidity issues and non-compliance notices from the NYSE, which is a fair assessment of their history. The reality, however, is that this perception is outdated and fails to account for a string of news releases over the past few weeks that suggest a radical, almost frantic attempt to redefine the company's identity and financial viability. Retail traders often focus on the day-to-day whipsaw, watching the stock bounce between its daily low of 0.48 and high of 0.55, driven by massive volume. Today's trading volume is already over 166 million shares, which is staggering for a company with this market capitalization. This volume indicates substantial institutional and highly speculative short-term trading activity, likely reacting to news of their acquisition of Orbit SRL, an Italian software firm specializing in operational resilience for defense and mission-critical organizations, and the capital injection from their $12 million public offering in September 2025, which explicitly stated its purpose was to fund strategic growth in defense technology. This level of corporate re-engineering in such a compressed timeline challenges the bearish narrative of a failed laser company. We are witnessing a shell company being rapidly transformed into an acquisition vehicle for a completely new sector, and that is what's fueling the current short-term volatility. The stock is reacting to a change in DNA, not just sales figures. Let's dissect the recent price action and the forces driving it. The stock is currently trading near the middle of its recent one-week range, but the overall trend since August has been dramatically upward from its 52-week low of about $0.12. The immediate spike in October was directly tied to the announcement on October 7, 2025, regarding the definitive agreement to acquire Orbit. This Italian software firm, whose platform is focused on operational resilience and crisis management for defense and mission-critical organizations, immediately provides BURU with an entry point into a software-as-a-service (SaaS) business model, a significant upgrade from their historically capital-intensive laser manufacturing business. The market rewards SaaS models with recurring revenue and high margins, and the stock is reflecting this anticipated valuation shift. Immediately following this news, the stock saw massive percentage gains, a classic reaction to a positive, transformative catalyst in the microcap space. Technical indicators like the RSI are suggesting the stock may be technically overbought, and the MACD is in positive territory, but the daily volatility remains extremely high. This is where active investors using platforms like Robinhood or interactive brokers are trying to capitalize on the moment-to-moment swings. The critical resistance levels to watch, based on accumulated volume, sit near the 0.56 mark, and the immediate support is holding firm around the previous close of 0.4752. Any strong push or fall through these levels in the next few days will be highly informative of whether the transformative news has been fully digested or if a continued momentum trade is in effect. For anyone interested in the technical minutiae, the average daily volatility has been over 40% in the last week, which screams caution for risk-averse investors, but is exactly what speculative traders chase. The stock's beta, a measure of its volatility relative to the overall market, is reported around 2.81, confirming its status as a high-risk, high-reward security. Contrast that with stable, established tech companies like Apple stock or the slightly more aggressive growth of Tesla stock. BURU is playing an entirely different, highly speculative ballgame. Moving beyond the immediate trade, it's necessary to understand the original core of Nuburu Inc. Before this dramatic transformation, Nuburu was a pioneer in high-power, high-brightness industrial blue laser technology. Their blue lasers are fundamentally more efficient at processing materials like copper, aluminum, and other highly reflective metals than traditional infrared lasers. This technology has applications across several booming industries, including electric vehicle battery manufacturing, aerospace for high-density 3D printing, and electronics packaging for welding. The challenge was that despite the superior technology, commercial adoption and scaling proved slow, leading to high operational costs, thin revenues, and persistent negative earnings per share, which sat at minus $2.20 as of the last reported figures. This operational friction is what led the company to its current financial strain and the necessity of the transformation plan. This historical context of a technologically sound but financially struggling business is essential because the new defense and security hub is a direct response to this failure to successfully monetize their industrial laser technology at scale. The company hasn't completely abandoned the blue laser business, but is now seeking to apply it within a defense context as an additive to their newfound focus on defense tech acquisitions, particularly those with software components. This subtle but significant shift is a key point to internalize. The blue laser unit is now being revitalized with new defense sector applications, effectively repurposing the core science for a new, more lucrative customer base. The strategic pivot spearheaded by Executive Chairman Alessandro Zamboni is the real long-term narrative for BURU investors. The recent announcements detail a multi-pronged approach, which includes first, the aforementioned public offering to raise capital, second, the initial acquisition steps for an Italian electronic warfare company called Tecne, which started with a joint venture and stake acquisition in August 2025. And third, the more recent and perhaps more telling binding agreement to acquire Orbit, a software firm. By combining Tecne's electronic warfare and vehicle systems with Orbit's operational resilience software, and then integrating Nuburu's blue laser technology, the company is aiming to provide a complete end-to-end defense and security suite. This is the heart of the new business model. Shifting from a niche industrial hardware supplier to a diversified defense contractor with a recurring revenue component from the Orbit SaaS business. Orbit's projected revenue acceleration from a small base to nearly $20 million by 2028 with attractive gross margins is the crucial long-term sweetener for investors who see past the current volatility. This model change from a capital-heavy manufacturing structure to a defense-focused systems integrator with a high-margin software core is the true reality contrasting with the market's tired expectation of a penny-stock laser company. It is a calculated move to access higher valuations and a more reliable revenue stream from the government and enterprise defense markets. Investors watching Fidelity's move in the tech sector or the market dynamics around NVIDIA stock can appreciate the multiple expansion that follows a successful pivot toward high-margin software and specialized government contracts. Now, let's address the high-stakes question. What could happen with BURU stock in the next 10 days? Given the stock's extreme volatility and its tendency to trade solely on news, the short-term outlook is entirely dependent on two factors: sustained momentum from the Orbit acquisition news and the lack of any detrimental financial updates. The period we are entering is a vacuum of confirmed scheduled news between the October 7th Orbit announcement and the anticipated Q3 earnings release, which is only estimated to be in mid-November 2025. In this vacuum, the price action is likely to be a combination of technical consolidation and speculative trading around the key support and resistance levels. A few short-term scenarios emerge. Firstly, the news digestion scenario. Traders who piled in on the Orbit news take profits, causing a pullback toward the established support level of 0.475 and potentially lower to the next technical support around 0.44.
Secondly, the continuation momentum scenario. If the heavy trading volume persists and retail chatter, often amplified across social platforms, maintains its focus on the new defense company narrative, the stock could test and break its resistance at 0.56, potentially moving toward the 0.60 to 0.70 range, a common technical target for highly volatile securities after a major catalyst. The key here is the volume. If volume drops off significantly, the stock will struggle to hold its gains. 10 days is also enough time for an unexpected, non-scheduled update, such as a material filing regarding the Techne joint venture or further operational updates on the transformation. Such an unscheduled release, positive or negative, would immediately override any technical analysis. Furthermore, we are in a broader market environment where platforms catering to self-investing, like